Yo, mic check, mic check. Welcome to another London session morning live. Your boy Leroy James Masiri, head trade of 365 Trading Academy. If you are there with me on the live, I know we started a little bit late. I blame my life partner, guys. Yes, man, this woman. But anyways, we're here. If anyone is watching on the live, please do a sound check for me. Please let me know if I'm, loud and clear. Please let me know if I'm audible. I would appreciate that with all my heart. But otherwise, I'm just gonna get going. I'm trying to figure out a way to quickly share this to the rest of the gang. Right, guys. So as usual, we're going to look at a couple of select markets that I spoke about yesterday. The reason for that is if we scan the entire market in 30 minutes, you're going to get the least amount of value out of me because you can imagine how big this market is. And so fundamentally, it is far much more better for me to just keep focusing on a handful of assets, right? That will have the most impact. We can swap them out, but we'll have to make final decisions this week. So, for example, we can remove AUDUSD. I think that'll be wise because AUD is more liquid during the Asian markets, right? It's liquid throughout the day, but I'm just saying, the Asian markets are closed. So AUD is now closed for the day. In terms of when is everybody awake, blah 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 blah. So it might be a good idea to kind of like swap that out for something else, some euro pair, euro pound, euro something, just so that we get the most out of this. Although the sessions that we're doing are all done during the London session, I'm sure you're starting to realize that some of these plays happen during the London session and also extend into the New York session, right? And these are intraday setups for the most part. I don't want this to be another war room where it's all about signals, right? I think we do a very good job doing long-term swing trading, and I don't want us to kind of like smear or smudge that brand. But what this does is, in the long term, it will help you start to understand the type of sentiments that are thrown at you. Thank you for the audio confirmation there. Right. So let's have a look here. Right. So we know that stuff is down. Let's quickly find out why stuff is down. Stuff is down because Chess, Cartoon Network, or buy, right? We are all being treated like little cartoons by Putin, the United States, Ukraine, small parties. I mean, I tried to research what was going on here. Is it really a bad thing if people are going in, striking for independence? Is this headline clickbait? All we need to know is that the markets hate it. So the Dow dropped more than 500 points as tension between Russia and Ukraine brew. Ladies and gentlemen, we're just in the middle of a sentiment-based market. 2 years ago, I was in the adjustment process, same time frame, January, February, March, with COVID. COVID was a new thing in the markets. We all had to adjust. And I didn't change my strategy. I just stayed away from small time frames. Small time frames, definitely I stayed away from that. Overall, markets played according to supply and demand, right? So we've got Ukraine in the forefront. Ukraine is committed to diplomacy, but ain't afraid of nobody. Oil prices surge, right? We know what the game is here. We're not going to waste our time talking about oil. We know we're going for $100. We know that this man here won't stop. He won't stop. He will successfully get $100 per oil barrel without even starting a war. That's my take. Because we're not that far, but I won't even pull up the oil chart because we've spoken about this every single day. Singapore hopes to take decisive steps toward easing restrictions, right? So they want to get out of, the COVID vibe. UBC's short-lived strength for gold expects prices to drop to $1,600 by the end of the year for gold. That's interesting. I don't know if I buy that. Chinese cryptocurrency exchange plans to re-enter US market, but with asset management focus. So this is just like an exchange fund. Doesn't really matter. And I'm still to do a big crypto video on this stuff. So just look out for that this week. Maybe I should just set a tentative date and stick to it. So today is Tuesday. So tomorrow I'm gonna drop a massive crypto update video sometime in the afternoon. It won't be live, it'll be pre-recorded, so you can watch it whenever you get a chance. But I think it's important you think through the stuff that I'm going to suggest tomorrow. Right, Biden orders sanctions on separatist regions of Ukraine. So there are some regions in Ukraine that are doing their own thing, starting wars with some small parts of the Russian border army. And so Biden wants sanctions. If we're not going to sanction the whole of Russia, if we're not going to sanction anyone, he's now calling for sanctions on some type of separatist regions of Ukraine. EU vows additional measures, right? So it's like, oh my goodness, are we now against Ukraine? Weren't we against Russia? I don't know. Next bull run won't be until the end of 2024. I saw this just before I went to sleep last night. This is quite an interesting read, all right? And you know, worth considering. I think it's worth considering. I think 2024 is a big jump. I think it'll be the first time Bitcoin stays in winter, in a winter cycle for that long. All right. So I don't know if this is correct, but I do believe we're in a winter cycle. If you remember my numbers, we need to breach below 28,500 US dollars on Bitcoin for me to officially declare we're in a winter market. But we are in a winter cycle within a bull run, a strong market correction. US warns that Moscow has compiled post-invasion kill lists. Like, come on, man. Like, this is just crazy, right? And so it goes on and on and on and on. All right. So CNBC, I like CNBC just to see how markets actually are doing. So if you look at the pre-market, the futures market, we are down right across, right? Your Dow futures is down. Your S&P 500 futures is down. Your beautiful NASDAQ is fading people across the board, which we spoke about in almost every war room. Let me just give you guys a full screen view. And then if you look at oil, right? Oil is doing well. Look at that, 94. I promise you, the last time I did a war room, which was about 2-3 days ago, we were 91. We are $6 away. We've gone up by $3.60. We are $6 away from touching 100 US dollars, and then all hell will break loose. Long term, if you're a macroeconomist like myself and you believe in the big picture, a lot of human beings are not yet ready for what that means for them, and so they're not saving accordingly, they're not spending accordingly, etc. Right? So that's kind of like the pre-market, right? And you know, it's safe to say, I think you know the road ahead is kind of like gloomy, right? So stocks are down naturally. Your Tesla, your Amazon, your Google, your Microsoft, you know, your big tech, your mega caps are not doing too well, and your Russell is actually struggling. So my indicator for a stock market recovery hasn't really. I'm not yet that excited about how she's doing, because she almost had a very good week the first time I brought this up, but the second week has been tough. And no one can outperform a war. Let's just be clear. As long as there are wars in the markets or the threat of war, no one can outperform a war. Right. So let me just quickly refresh this. This is based off where I stopped last night. Let's see, with the London session having opened about 28 minutes ago. Let's see. So Euro decision on sanctions against Russia to be made by this PM. Right. So there's going to be some decisions on whether to sanction Russia or not. We've already spoken about the oil and natural gas crisis if sanctions happen. Russia's central bank says ready to take all the measures to support financial stability. That's like, look, man, if we go to war in our country, we are fine, right? We are prepared for your sanctions. Your sanctions don't scare us. That is bearish. That is risk off. Like sanctions, like if you know about the case of Zimbabwe, where sanctions are not the only problem in Zimbabwe, but definitely historically are always blamed to be the only problem in Zimbabwe. The problem in Zimbabwe is neoliberal policies from the 1990s, the Mugabe, ZANU-PF legacy, and of course sanctions, right? But Russia is saying, we don't care about your sanctions. We can take care of ourselves. You can sanction us. And this is actually quite dangerous, by the way. If you look at the fact that they're the highest petroleum producer and consumer in the world, right? If you sanction them, they might sanction you back. But yeah, that's neither here nor there. UK's David will be introducing sanctions to Russia. So UK is on board. Europe is making a decision. Biden is somewhere in the corner screaming sanctions. And so futures open in the negative. Euro stocks, all the European stocks, we're going to look at the FTSE 100 today, open in the negative, right? So what I'm doing here, guys, is just teaching you risk off, risk on, risk off, risk on. You need to always think like a billionaire. This is what they're waking up to. This is what their financial advisors are telling them to do. This is the mainstream decision, whether they move or not. But this is the source of the fear and panic in the markets right now. Russia says open to talks and diplomacy when asked on possible whatever talks. Okay, more talks. Risk of vibes dominate ahead. This was at 7:28 a.m. today. Russia-Ukraine tensions continue to weigh on the market. Bank of China is urging banks to increase lending of mortgages and to developers. Don't forget the Evergrande crisis that I taught and spoke on last year. And I told you guys that China was going to be in this deep hole for a very long time. But not only that, right? I'm pretty sure it's going to have a long-term effect to the global housing markets. Bank of England to speak today. We'll see what that's about. Australia pulls out diplomats out of Ukraine, citing increased risk to safety. This was at 6:28. Australia, AUD, risk-sensitive asset. The country of a risk-sensitive asset is now pulling out diplomats because of risk. Goldman Sachs says UK stock could fall another 6%. We're going to come back to this because this is going to be interesting for this morning session. Because remember, the stock market yesterday was not open, right? Yesterday was the presidential holiday. Ironically, it was also, never mind, man. It was also a public holiday in Zimbabwe because it was Mugabe's birthday many decades ago, right? China's finance minister says it will strengthen cooperation between its fiscal and monetary policy. That doesn't matter right now. Ukraine repeats its border will remain unchanged regardless of Russian announcements. Interesting, right? Bitcoin losing further ground, hitting 36.5. Ladies and gentlemen, no one believed. No one believed. I've got screenshots. I posted this in a lot of crypto groups. I have screenshots of people laughing their ass off at me. I have people telling me that I'm crazy. I have people telling that this would never happen, that we did 65,000 US dollars on Bitcoin. Therefore, at the very least, support will be found at 50,000. It's no longer a small asset, blah, 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 blah. And look at where we are today. I still think 30,000 US dollars is open for play. And when it is, I'll start to buy. I'm already going to dollar cost average at the end of this month. You just have to, because you can't perfectly time the markets. But this is a good discount. Basically, it's like when someone gives you a nice big piece of land and it used to be 65,000 US dollars, but now it's half the price. It's 50% off. But the potential for that piece of land hasn't changed. Do you understand? If you thought the piece of land was going to be worth 100,000 US dollars one day and you were willing to buy that piece of land at 65,000, why on earth would you not want to buy it at 36,000? That's all this headline is saying to me. I don't know what other people are seeing. I don't know what the panic of fear is. But for those of us who believe we'll still be alive 10 years from now, as long as we look left and look right and we don't get hit by a car and we take our vaccines, we should be fine. This is a golden opportunity to create wealth, not just for yourself, but your family. Open your eyes, keep hustling for now and rest later. If you had a normal 8 to 5 job, you would still keep your salary because you're relying on your pension. Your pension is 20, 30, 40 years from now. So just wait for Bitcoin. Give it a year. Give it 6 months. Let's see what happens. But let it come down so it can go up. US to announce new sanctions on Russia. This is getting boring. NZD traders, heads up. Today is a big day for NZD. We should look at NZD today because there is the potential for an interest rate hike. And we might even be late because this is like, big on the Asian market time. Right, so I'm going to stop here, guys. It's about 4 a.m., 3 a.m. Nothing much happened, right? So the first page for me is good enough. Right, so let's quickly look at the Goldman Sachs headline because I think that's quite fascinating. Goldman Sachs has the stock market dropping by another 6% if the tensions are around Russia and Ukraine continue. Now, if the tensions between Russia and Ukraine continue, they think this is going to drop. And I think the tensions between Russia and Ukraine will at least continue until we make contact with $100 US per barrel. We've seen that within 2 days, oil has moved up by $3.60. So it's at about 94, 90 something. So that could be like within a week, within 10 days, I don't know. But outright conflict in Ukraine, which is what's been happening now in that weird region, right, coupled with these threats of continuous sanctions could push US stocks 6% lower from Friday's close. All right, well, let's see what that means. You guys remember this chart, and I say remember because I assume those of you who attend these morning sessions actually come to the war rooms to get that compounded education, right? So we spoke about this line many weeks ago. Now, I have to emphasize this because when there's fear in the markets, the main thing that drives fear in the markets, by the way, is uncertainty, not knowing, the power of not knowing, which means I don't know when my stocks are going to recover. I don't know if it's going to be good now or if it's going to start to get better. I might as well get out. I'm panicking. I don't want to lose more than I've lost. I bought Bitcoin last year at 30,000. Today, Bitcoin is now back at 36,000. I might as well take the little profits that I can still save, because last year Bitcoin was at 65,000 and I doubled my money. So I don't know. I don't know is market uncertainty. When you have market uncertainty, you make short-term decisions that you will regret in the long run. I say to you a long time ago that a true market crash, everybody talks about crash. A real market crash, especially for the stock market, we will require to see the profits being removed at least a 20% deduction. That is from the most recent all-time high, 365 traders. This is slightly new, but not really. From your major turning point, right, in the stock market, not in currencies. In currencies, it's different. But in stock market, in relative risk-sensitive assets, stock market, maybe even Bitcoin, etc., 20% is a big deal. 20% is no longer, for me, considered a market correction, but a market crash. We haven't reached 20% just as yet. I drew this line for you here that showed you the 20% mark. I drew this monthly demand, that I told you about. I told you this was going to get smoked. This was in January. Check out my war rooms in January. I said this long wick here to retail traders looks like rejection. To retail traders in January, it looks like a ray of hope. I say there's going to be market inefficiencies that are going to fill this week. We've seen it happen right now in the month of February. This week has now been fully filled. I told you this stuff. It is recorded. Just go through there so you can see. Though I'm not doing this to say I'm always right. I am saying I want you to understand why I saw it right back then. And then I say, if we allow for a full crash, which is this 20% mark here, somewhere in here, I've located a demand. That demand is the last line of defense, a very crucial point, because remember, if price drops any lower into this area, it will now be above 20%, and therefore we have a big market crash. Then I say for stuff like NASDAQ and the stock markets, you will see that we might have to do our way with this channel, a clean correction in this channel. And so, no one wants to hear it. I understand, because your whole life investments are stuck here. I understand. But if this doesn't hold, then this is at play. But this is part of a channel. It is the base of the channel, but it's part of a channel. So it might not hold. Then this is at play. This is very unlikely. Right? This big move into the downside is the stuff that I pray for, but very unlikely, right? Instead, you might get a solid hold here, which would be cool, but we need the war to go away. We need the war to go away. If the war doesn't go away and this doesn't hold, then sure, you're looking to rebuy NASDAQ somewhere there. Now, most of us in Africa, those of you who follow my content, probably don't know how to get access to owning shares in these companies. You probably don't have share ownership. So you're looking at this for trading setups, right? And I'm telling you right now, it's a terrible time to buy. That 430 stuff, CNBC app stuff, that cool free stuff you see on those Facebook groups, you will lose your account, right? And I've been quite clear about this. Now, let's go to Goldman Sachs. Goldman says, well, look, man, if you think about it, judging where markets closed on Friday, so I have to go to this chart here on the daily time frame. Today is Tuesday. Today is Tuesday. This is a Tuesday candle. This is a Monday. So this is Friday. So Goldman Sachs says, well, looking at where price closed on Friday, if the Ukraine war continues, I should see a 6% drop in the stock market. So let me just find what that 6% drop looks like. So you see now on 4.6, 5.6, there we go. And that right in there is about 6%. And then if I just to see better, right, I want to see better. If I look at where the Goldman Sachs 6% is, man, it's just that I'm going to have to remove it because the all this information is, I want to compare where my 20% mark is, right? I'm hoping that makes sense. I want to see how far the 6% drop would be that Goldman Sachs is a big player in the markets. I mean, these guys were right about the Great Depression in the 1930s. They literally are the best of the best. So it's nice when they talk. I like to listen. So you see when my yellow line is, that is that 6%. From Friday's close to 6%, which means their anticipation of a further 6% drop in the stock market will create more problems. It will create more sell pressure, because for someone like me, I'll be like, okay, you've met your 6% bearish target, but you're now well beyond the 20% mark. I'm pretty sure there's some strong daily demand somewhere here. For example, if you go to daily, right, somewhere there, that would match that line. I'm pretty sure right there. So these are your last lines. And if you look at these daily demands, I don't think they're the strongest. I feel like we've seen better demands like this one here fail. I don't know if this is truly a remarkable defense. Failed to create a bearish engulfment, number one. Didn't give us a strong, let me just try and give you guys a better perspective. Didn't give us a strong, engulfing perception. So for me, right, stocks right now are at their worst. For me personally, for me, the stock market is really, I mean, this level has been created once, has been revisited several times. You don't get the strong, explosive demands. All over here where these ones are, prices already revisited and tested, right? So I still smell blood, right? I actually thoroughly regret closing my long-term sell on NASDAQ. I had one long-term sell from somewhere up here. I allowed this to happen. I came to price, and then when 4,300, when I thought the 4,300 level would at least be defended, I then closed my sell. I thoroughly regret that. But there we go. NASDAQ is bleeding, right? So please be mindful. You are in a risk-off sentiment. Nothing is safe. Bitcoin is falling. Everything is falling. As a trader, you should be selling. As an investor, you should be thinking about your life. I can't make that decision for you. What does your life look like? Is it better for your life to close and keep those assets, which means you trust yourself? It means you trust that you have the ability to time the markets. Because if you don't have the ability to time the markets, you're going to close and you're going to spend that money on dumb stuff instead of your future, right? And that's just my opinion. Right, now, let's look at our currencies. Just in general, the dollar, on the daily time frame, I'm on the daily time frame, the dollar did the dip and then came back up, and then there was some trades, sideways trade on that H4 order block, and then finally, thanks to safe haven, risk-off sentiment, the dollar is starting to point to the upside, and so roles have reversed from when we looked at this last week, Thursday and Friday. EURUSD is back to falling, safe havens are pumping, JPY is pumping, dollar looking good. Pound USD was trading sideways, trying to lean to the upside, now falling, CAD falling, which is quite interesting, right? Because CAD should be doing well, with the anticipation that oil is doing kind of well. But we might have to look at, the bigger things. Is there governing supply, governing demand? I don't remember. Look at the Swiss franc really taking advantage of the few days we had of a very weak dollar, right? Swiss franc is strong, very strong. And we just read here, by the way, that one of the headlines was that they are considering easing COVID protocols. They're trying to move out of Omicron, etc., right? So that's all good news for the Swiss in general. AUD, our risk-sensitive assets, very strong from yesterday, right? At some point they were strong, and we'll see how they are, right? So kind of like just an overview perspective. Now we go one by one, just like we did yesterday, and then we'll wrap this thing up. AUD, USD. And I'm going to show you some of the trades that actually happened from what we discussed yesterday. Right, so yesterday we spoke about this. So all of this stuff is from yesterday. So let's see how markets have reacted in the short term. I'm going to go 15 minutes because that's really a short-term trader's time frame. Right, so I said price came back in here, price went up there. I said personally I would not want to sell here because there's a better sell somewhere up there, right? So that's what I'm waiting for. And then I said, cowboys, where are my cowboys? If you want to buy here, you're a cowboy, good luck. And you can see for as a statement of fact, this buy failed, completely failed, right? In fact, you probably got tagged so many times. Price didn't go all the way down as if to say bearish movement not strong enough, but definitely had been tagged here, right? So this is why I always say cowboy trades are generally not for me. I understand that intraday timeframes have their own type of trends. But this for me is price moving to a lower low. We know why. We know that we are risk off. Unfortunately, as a swing trader, I still want the higher sell. So I'm going to let small traders, and I say small, I mean short time frame traders, enjoy themselves here. But this is a good supply that was tagged, price consolidated, collected more sell orders. We're getting a strong push to the downside today. I don't see this change in any way. Right. And then Euro USD. Euro USD, I was actually in this. I think I did send you guys a screenshot in the group as soon as this buy got tagged. I think I was up last night, 7 p.m. I sent you guys evidence. I had made about 140 US dollars between Euro USD and Pound USD, right? So price did rally. We didn't get the full upward momentum as soon as the war stuff dropped, as soon as Putin was live at about 4 or 5 p.m. There it is there, right? And price made contact with the supply, markets turned, right? And we spoke about this, right? So for a short-term trader, I want you guys to remember, because people are going to be like, oh no, all these things are not working out. For a short-term intraday trader, this is your life. For a short-term intraday trader, you can't judge this trade based on what happened as of this morning. This is your life. As a short-term trader, this is me. Yesterday, I was up $140, and I told you guys, all I'm going to do, because I don't really respect this kind of stuff, is I'm going to break even. I broke even. I sent you guys a screenshot of me breaking even, and I went to sleep. And lo and behold, when I woke up, price had zeroed me out. So intraday traders, you need to have better profit target margins. I think that's the message, right? If you see the move, you absolutely need to have better profit margins. I still want the long play. The long play for me is for Euro USD to gain enough strength to come back and go to an institutional long-term level of selling. But unfortunately, because of the war, and I sent you yesterday's headlines about what the United States said and what Russia said, and markets naturally imploded to the downside, right? So now let's see what we have today. Right, so if price that has clearly made its intention known that they're definitely risk off, and markets are just going to continue falling. I'm just gonna pull back. I want to see what the daily looks like, and then I want to see what the H4, H1 looks like. So I'm gonna remove this now. We no longer need it. Right, we are literally now at the bottom of a daily demand, and it's not even the best type of setup. So just so we're all clear, and this will be the third time Euro USD on the intraday time frames has faked a long-term movement to the upside. On Thursday, if you remember, somewhere here that happened, and then there was another breakout of strategy on the 50 minutes somewhere there. It will be the third time markets keep being rejected here. Every time Euro, AUD, NZD are running strong, we get a strong sense of a bearishness, right? Markets are pushed down. Now, this is not a good demand. See here on the daily time frame, you would think you're holding something strong, right? Markets have really invalidated a lot of those buy orders due to panic. And I would not be surprised if these levels get taken out. On the H4, you may say to yourself, oh, Leroy, we got a fresh start and this is just a retest. And I want to agree with you, because as long as you're intraday trading, you can make money when this happens and then make money when that happens, and you know when to get out. I'm fine with that. But for me, I think the sentiment is going to outweigh any successful, long-term rally, unless if today they declare another headline, war is over, blah blah blah. I suggest play it safe. You want to wait for this area to be taken out. You want to also observe what price has been doing. Price, in its own weird way, has been observing structure, right? These trend lines are set in place to remind us of very, very important moments. There's one there, there's a second touch there, there's a massive fake out, a massive liquidity run removal there, and then there was another one there, right? So all of these are just letting us know that, look, man, there's some serious rejection up above. I would play this for the long run. You will know I've been waiting for a higher supply, and I'm not really an intraday trader. I'm just covering sentiment for you, to be honest with you. I find this quite risky. But on the H4 time frame, I would say, okay, let's play a quick game of retracement, right? Let's see how the smaller time frames have been handling retracement. I'll look at my latest swing high, swing low. I'll drop a Fibonacci here and I'll be like, oh, okay, so it makes sense why this has been so contested as an area of rejection, right? Price is in that very close to that golden ratio, number one, but definitely that 50% level has been holding price down. So every time price came back, price was rejected there. And then I'll start to slowly consider another leg. So if I had this here as the ultimate swing high for the latest leg, and let's say today in the morning between 10, if you go to the 15 minutes time frame, you'll see the first hour in the London session is massive chaos. And once those orders have settled and they're in, you get the best movements of the London session around about 11:30 to 12 p.m., by the way, into the New York session at 2 p.m. So let's say you get some type of movement like that. Well, and price starts to point to the upside. And then you can say you've got a swing high, swing low, which would allow you to draw a new Fibonacci on H4. Now let's have a look at what that looks like on the H1 time frame. In the H1 time frame, we've got something like this. Because if I take an intraday trade, my goal is to turn it into a swing trade. I just can't help. So that's why I just break even and do nothing, right? I never close. I never go, oh, I've made $100. Let me take profits. But that's just my style. Like that's just what I like to do, right? So this is quite nice. You can see there's a strong imbalance that follows this particular area. You can see also it's relatively close to a bearish engulfing pattern, relatively close to that trend line that has provided us with consistent rejection. And it's about 38 pips wide. So if you wanted to have a swing trade out of this, that's a good area of value. Most of my swings, you'll see I hold pips, stop loss pips for about 50, 60, even 100 pips sometimes, as long as it makes sense risk reward ratio. So I would like for price to rally back here. So maybe another fake headline about progress and peace and happiness, love and harmony in the world, and potentially allow price to come here today, tomorrow, or during the New York session and then shoot it down, right? So that's a possibility. I don't think I'll be taking any trades today, to be honest with you. I have a total of 29 assets that I've covered from War Room 50, 51, 52, 53, and 55 on our YouTube channel that all need to be reviewed based on the new data. So I'm spending my day doing just that. I will not be, on the trades. I won't be able to take a buy trade to the upside because I don't think that's smart. 15-minute perspective will look like this. So on the 15 minutes, this is what you have. You definitely have a fresh area of value here. Right, so let's say you don't like my idea of holding price all the way somewhere up here, like a 38 pip stop loss, and you want to take a risk on this area of value, right? So then there, you just maximize on the golden ratio, which is literally 15 pips, right? So you can imagine how big a lot size you could have if this area holds. Granted, find a good place where price will want to exit. If price tags you there, find a good place where price will want to exit. I can't see a strong demand all the way down. Something is green here, so there's definitely a demand here on the 1 hour time frame. This is a strong H1 demand. So you've got a situation where you can take a 12 pip trade, 12 pip risk trade, and get it to run all the way down here. All right, which believe you me is a perfect risk to reward ratio. In fact, it's probably bigger than 1:3. All right, I might have a pen in order here and then call it a day. I have no intention to actively trade today. So that's 1:4, right? So this could happen, right? What it will take for price to climb up a couple of pips to trigger you there, I don't know. I don't know what the headline is. We are in war territory, but that for me is what I think would be a plausible situation. The reason why I want my stop loss a little bit higher like that, which would which would mess up your risk reward ratio, is fundamentally because of this. All right, I don't trust this bearish engulfing pattern. I don't trust the retest. I think there's a lot of sell power here. All right, personally, but then I would want to take this and really ride with it because this is not worth the risk. It's almost 1:2. So personally for me, as soon as that happens, I would want you to kind of like take profits and then want to start to slowly see break of market structures and then let this thing glide with me somewhere all the way down there, which is much more in line with the bullish daily demand, right? So that's a nice place to come to, even somewhere there, right? Something like that. So that's how I take these small term trades. I like the entries they might give me, but I'm not trying to. I forget. I'll even forget to close trades unless I have a good TP in place. right? So whether you're doing this for short term, long term, I mean, this is your best bet right now. H4 looks kind of like clean and solid, right? For a fresh touch. Yes, price could take this lower supply here. Don't say I didn't tell you that. But for me, a higher supply is always better, all right? And then if markets can remove this area of value, I would be eternally grateful. All I'd have to do there is just to break even and hold. But I haven't given up on my vision to sell properly at the top. I think price still needs to come back here. We just need to get through, one of the simple things. And remember, guys, remember how markets played everyone last month. We are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days away from NFP. We're 10 days away from NFP, and that makes it worse because 10 days away from NFP means we are 10, 9, 8 days away from ADP. So ADP could come up with more shocking data that would weaken the dollar, strengthen the euro. The euro all of a sudden could then quickly rally into this area here just before NFP, and then boom, we get the real NFP and price drops. Dollar is strong again. It literally happened just like that, just 4 weeks ago, right? So don't get stuck in the small time frames and lose all your capital, right? And miss out on the bigger picture, right? We still got a strong dollar trend going up, right? It's just that the dollar has been stolen on this H4 demand that it has not broken. I've never seen a glass effect like this. On a major currency like the dollar, take its sweet time, right? We saw that the H4 demand was weak, and then we saw that on H1, inside the H4, they added a little bandage. We saw that they took that out quite recently and came back to the final buy area levels, and finally markets were propped up. We can see that in terms of the short-term time frame on the H1, the dollar has arrived back at a supply. DXY is right back at a supply. So if the dollar falls today, right, and tomorrow, right, let's say all these supplies, 1 and somewhere here 2, if all these supplies are strong enough to delay dollar ascension, what do you think is going to happen to euro? Euro is going to go back up, right? Because there is a bigger trade at bay. Markets are very much preparing for FOMC. So you need to have that mindset with you. Pound USD next. Right, so yesterday we spoke about the pound USD, and I told you about the short-term buy, which I took, which I posted on the short-term group, which I told you I have absolutely locked, broken even. And look at this beautiful rally. Because remember, as an intraday trader, you once again, don't judge this based on what you see now. As an intraday trader on the 50 minutes time frame, this is all you cared about. We start here. Yesterday, 21, and I said, look, man, 6 a.m., 8 a.m., 9 a.m., there we go. We spoke about this, and straight after yesterday's live session, price rallied down and then went up a bit. And between Euro USD and Pound USD, that was the money I was showing you guys at 7-ish, 6 p.m. And then later on that day, 10 p.m., 9 p.m., 10 p.m., 11 p.m. last night, market started coming down to the downside. So intraday traders, you just need to know when to get out, when to take profit. So we didn't get a full, momentum to the upside. I would have loved a nice touch up here. In fact, it was this old 15-minute supply that stopped price. So fresh touch, retest, glass effect. Interesting, right? They didn't break through it. And this is the same daily supply that I keep telling you is absolutely weak. Look at how markets keep using it. This is the same daily supply that I have no faith in holding a long-term sell. And now price is actually dropping completely outside the supply zone. If you come into the daily time frame, you'll see what this looks like. Let's just clean it up real quick for you. I just want you to understand. And for me, once again, I really genuinely never suffer from FOMO, right? So you've got a bearish engulfing pattern being formed. Right, and you can literally see, I am not making this up, the amount of glass effect in this particular area of value is incredible. And I just told you now, dollar is preparing for a very, very short-term, hours to a day type of weakness, unless if the dollar breaks that H4 chart. If the dollar breaks the H4 chart and shows that type of strength, then obviously we can get a pound sell day. If you are a cowboy, I am not a cowboy, but if you want to be a cowboy, cowgirl, then look at H4 time frame. You can see for yourself, you've got 3 bearish engulfment candles. To me, these always signal a bandage. You know, in war, when you're bleeding, but you still need to fight, this supply is bleeding profusely. This supply is extremely weak, but still wants to fly, to fight. So I'm looking at these levels at market open in the London session. I'm seeing a bullish engulfment on the H4 versus 3 bearish engulfments. And I'm like, well, these people think I'm a Popeye, right? It has to be. It really has to be. Markets assume down panicky traders are on board, and they are. They really are. Now, I wouldn't buy this personally. I would not buy this personally. There's a lot of sell. But to be honest with you, I don't want to lie to you. There's nothing for me to sell. I mean, what's this? Going to choose a higher supply, which is this or this? It doesn't really matter. Everything inside this daily supply, I don't like. I'm not willing to use my money to break through this area. So I'm going to do nothing. Although pound USD is showing signs of risk off sentiment, right? So those of you who are cowboys, you're going to have to go down to H1 and wait for this. Cowboys, H1 and wait for this. And you know, sometimes I'll say this, and when I'm looking at my bigger swings and I come across this chart, I'll be like, oh, but this looks nice. And then I'll take it, right? So I need to be more disciplined than that. On the H1 time frame, I would reduce that area of value demand to this. So you want to wait for this to happen by 12 p.m., 11 p.m., 1 p.m. today. That's kind of like your situation. Fundamentally, that's what this whole area is telling us, that because of the risk of sentiment, more sell orders have been put on the table, etc., etc. And 365 traders, by the end of the day today, I would have worked on our spreadsheet, so you can check the latest COT data, and you'll see that they did add a little bit of small sell pressure for this particular week. So it makes sense why there are these bandages across the board. But yeah, I have no interest in this, and you might want to take profit here. You don't know how strong this area is. It'll look like this is the first time it makes a touch, so be very careful. Markets might not even make it all the way down to this demand. Markets might actually just turn in the next 2 to 3 hours to make their way here. It's going to be up to you and your risk, sensitivity, if you want to take this trade. All right, over there. Pound USD done. I'm sorry, guys, we are running out of time. USDCAD. Go back to daily. Ugly, not wasting your time. Just like yesterday, I'm not going to do anything. I think we should just keep it to, would I do something? Would I not do something? EURJPY, we are really waiting here. We are really waiting for a beautiful play. We're waiting for a push to the upside. And unfortunately, with all this war talk getting worse, markets didn't even get a chance to retrace yesterday, right? I would very much love to be in this. I mean, I called this beautiful trade in war rooms. It's so sad. I just forgot to set a pending order. This is for one of my daily swings, right? This would have been very good money. And then since then, on the smaller time frames, with this new idea of doing market live sessions in the morning, we would have received 4 entries, 4 other sell trades, just that I'm not in them. I don't know if anyone else is, but me now, I just want to be very honest. I am not in any one of these. So I'm really hoping for a push to the upside. You know, if I show you the 50 minutes time frame, we spoke a little bit about this yesterday. And so that's what we're waiting for. Right? Somewhere up here in these areas there, somewhere up there. So a clean entry where I have this yellow zone here, right, to target that peak supply, and then a stop loss up there, etc. But you can see that since yesterday, price has done nothing but run towards the south side, right? I know it's tiny, you can't see clearly, but it's just to show you, the full picture. But on the H4 time frame, this is what we have. Markets are now sitting on somewhat of an H4 demand, and it's a good demand. Outside of the risk of outside of war, you can see price rejects. You can see that the buy orders put in here on the 2nd of February, where we're very good. Markets are rejecting and hoping to push. The question is, how far will price go? Let's draw a new Fibonacci now that we found a potential swing high, swing low. Right, so you could get action only here. If price comes here and rejects here, I can't take that trade. I just can't accept it. It's not low enough. It's too low for me. Sorry, it's not high enough. Right, I'd rather sell there and have a stop loss in this range, just like we spoke about yesterday. Right, that's EURJPY. And finally, I want you guys to get used to trading other indexes outside of NASDAQ, man. Right, so FTSE 100, you saw the futures market is down. I haven't seen anything about the Queen, right? The Queen could be dead and no one will tell you anything for like 5 years or 10 years. But just pretend the monarchy is still fine, right? I don't know. But the Queen had COVID a couple of days ago, and then we're told, nah, she's got like this beautiful three viruses and everything is fine, etc., etc. So I don't know. I don't know what's going on. I know that the eurozone is very much enwrapped right now with this whole Russia Ukraine situation, and so because of that, naturally, there we go. Naturally, there's going to be key sensitivities. This market is extremely sensitive. We identified some serious sell pressure. This is the governing time frame. Look at this bearish engulfment. Price is pushing to the downside, which makes sense. I told you guys yesterday that we are literally inside, or we were inside, a major turning point territory. Now, looking at the daily, we can see that yesterday was another big red day, and we spoke a lot about why that would be the case. We spoke a lot about what to look for. I just want us to get to where we were yesterday, and yesterday's market open. I see we didn't leave a lot of notes. There we go. So there we go. So this is 1 a.m. yesterday. So yesterday when we spoke, we were somewhere here. Price was here at 9 a.m. And straight after I told you that this thing was probably going to tank 9 a.m., 10 a.m., markets created a bearish engulfing structure and fell. And you're like, but Leroy, how would I know to get in yesterday morning after you spoke? Well, we spoke about it, right? I explained what's going on with the FTSE. If you look left, price is just simply reacting to a clean supply. And this would have been a swing trade, right? I personally regret focusing my pending orders and my lot sizes on Euro USD and Pound USD. I wish I'd put more money in the FTSE. Right, so since yesterday, the FTSE has fallen seriously. Like, this is incredible. Right, so if I was to draw a swing high, swing low for today and see the path, the retracement, right? If you get a retracement, you want to take a trade somewhere here. If you get a retracement, you want to take a trade somewhere here. Now, the FTSE is different. Those of you who've done my course, you'll know that when it comes to indices, we also like to see a specific index number at play. And I did tell you guys that the FTSE is fundamentally a little bit different. The FTSE acts more like a currency. So I've never really given that much focus to 365 numbers, etc., right? But if you were to do that and it was to sharpen you, you better have the account to hold it. What I like about the FTSE for beginner traders and medium-term traders and senior traders is that the FTSE is cheap. It's cheap to trade. It's not as expensive as Nasdaq and Dow. It doesn't give you that much. So because of that, you can risk, appropriately. But if you look at the distance between 100 points, this is 7,500 to 7,400. There's a lot of room for trading activity. That's why 365 numbers are not really a plausible thing to use, especially if you're intraday trading. So if this was a normal currency and the trend was down and the governor is down and the weekly is down and blah, 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 then my stop loss is plugged somewhere here and I'm taking it easy and my entry point is down somewhere there. That's what I'm looking at based on what my Fibonacci is telling me. And because it's an intraday trade, let's have a look at what the 50 minutes chart looks like. I could have a nice normal 5%, etc., point system here. And then if I was really crazy, like some of our senior traders, I'd have a massive, 10 comma something lot size right there at 7500, 7502, just to maximize on that, because then that is the closest entry point to my stop loss, which means I'm risking the least amount of money. I like having a normal slot size here. Sometimes I will have another sell order there. And then we see, we could be wrong. We could be right. We could be wrong. We could be right. But if price was to come back here, I would be very much happy to try and shoot this down. Guys, I was talking fast because of time, right? We won't look at the DAX right now. There's not too many clean openings on the DAX. I can tell you that because I checked, but yeah, we can have a quick look. I am hoping for some a little bit of clarity, right? As long as there's big gaps, right? There's a lot of sell pressure on the DAX on these smaller time frames. If you go to the daily time frame on the DAX, you will see we've reached the bottom, right? A specific bottom. So it'll be nice to see if there's going to be a daily demand at play. So that's why I'm saying right now there's not much play. So I'm waiting to see if this daily demand will hold. If this daily demand does hold, right, I would like to see the DAX try to fight back, and then I'll be able to catch it somewhere here at the top. FTSE 100 and the DAX, trade them like currencies if you've done my course. Make sure you've got a clean multiple time frame analysis, clean head start. And then that is it, ladies and gentlemen. Thank you so much for attending our morning live sessions. Ethereum, Bitcoin, not much. Sorry, this is just from an Instagram post I just did right now or earlier on this morning around 7 a.m. saying, look, man, your levels of defense, retail traders are failing to hold the fort. 365 students, please, on the master trader spreadsheet that all of you have, at the end of the day, when you check to see all the new things I've done and put in there for you for trading between now up until the end of February, just see how the futures market looks in Bitcoin. Just see what they've done, because you'll start to understand why I keep reacting and saying the things that I'm saying, right? So there's going to be a little bit of a fight back here, up and down fight back, but check out my full crypto video that's going to drop on our YouTube channel tomorrow. Every single person, I wish you well, good luck, stay blessed, stay focused. You will not get rich overnight, so don't even try it, but build your account. Your account is so much better off making $2, and no one will tell you this because it's not cool, right? $2 every day, right? But the money game is played very differently. If I could just teach on this for 30 seconds, I will bring this back tomorrow. You want a trading system that will not make $2 every day, all right? Maybe that was a terrible example, but you want to respect a trading system that understands the doubles game. That is all you need to do as a trader, as an investor. If you're in real estate, money is a doubles game. A trading system that will give you double of what you have whenever the opportunity allows is better, because 2 times 2 is 4. But the problem is tomorrow, 4 by 4, a doubles game, right? 4 by 4 is not 2 or 8 or small. When you start to double 4, you're going to get 8. When you start to double 8, you're going to get 16. When you start to double 16, you're going to get to 32. You do this 100 times, you will be so shocked at the end game number, right? 2 and money in general is just a doubles game. So do not take your trading account like a joke because it's small, number one, but don't abuse it because it's small. Take clean trades and be very patient. Let the markets calm. Like, I know a lot of people who sent me messages saying during this time, given whatever the mistakes they've made already, whatever, they'll be working to put and add capital, and they're going back to redo the course. And that was absolutely, the smartest thing to do, in my humble opinion. I'm not heavily trading. Some of you guys have access to my 2 most transparent accounts. It's just all pending orders being triggered, if at all, because I chose the ultimate extremes. So I'm not making like crazy money on those accounts, right? Yes, I trade a lot of stocks in the afternoons. Yes, that's fundamentally my source of income. Yes, I'm selling a lot of crypto on trading platforms, etc. But I'm simply saying, look, at the end of the day, I am also being patient. I am waiting for market clarity, because the worst thing is to have zero capital when these things start to move, right? So stop buying NASDAQ, stop doing silly things that jeopardize your money. And I've told you guys before, and I'm telling you again, I am 70% cash until the end of this month, 30% long. And in the Wealthy in 3 Years program that I'm dropping at the end of February, you will see where I want to dump most of my cash. I'll be dollar cost averaging on a plethora of assets, right? And I think that's going to continue up until June, July. Right. So, and then I should release a report from what we spotted in October, the first financial note, and so that people can see, those of you who are faithful and are still holding, to have a look at what your portfolio looks like. All things being equal, have a beautiful day, everybody. Thank you so much for attending, and I will see you tomorrow. Peace.